Good afternoon, everybody. Welcome to your Thursday edition of the Trader Merlin Show. An exciting one today. The last, I guess, market outlook show I'm going to do. I might do one next week, but for the most part, I think I'm done. The first 2 weeks of this year, I've been having a guest on every single day, except for Monday, because Todd bailed on me, but that's okay. And going over kind of their perspectives and what they see facing the market, whether that's things challenging the market or maybe just personal challenges they may be experiencing going into 2024. And I thought we would continue that on today. As you guys can tell by the wonderful graphic here, we are going to talk 2024 market outlook with Corey Lane of Traders Army. Looking super cool with his shades on over there, but we'll bring up the real Corey. There he is. How you doing, my friend?
What's up, party people? How's it going? How you doing, Merlin?
Any better, I'd be twins.
I don't even know what that means. I hear that a lot. I don't even know what that means.
You know what? I just think it means that I'm just so much to handle that two of me would just be, I'd have to have two different people. I'd be two different. I'm so good. I'm so good.
You would have to have an assistant for at least one of you.
Exactly. Well, maybe the other one me would be my assistant. That'd be great. If I could clone myself, holy shnikes, we'd be in business there.
Yeah, that's a thing we should get into.
You probably think the same thing. I mean, you do so much over there, and you got so much going on your plate, not just your personal trading, but hedge funds trading and all that different stuff going on. You're a busy boy.
Yeah, there's not a lot of time, and I'm handling a lot of the management and admin side of things, not just the trading side. So I could use a good set of hands that are as detail-oriented as myself.
Yeah, don't we all? It's funny. Years ago, I had an evaluation, and my boss says, "You are one of the best employees I've ever had and one of the worst at the same time." And I was like, well, that's not a good statement. He says, "You're great because you just get stuff done." He goes, the hard part is you don't really work well with others because you don't trust people to get the job done right." And I said, yeah, that's exactly right. I do a better job than they do, so I'll just do it myself. It's fine.
That's pretty much right. That's pretty much it.
It's the way it is, right? Anyway, we got to step back and let people do jobs for us. Let me go to our first question, just so we can get through the materials here today. When we look at this 2024 market outlook, the thing I'm asking everybody right up front is, what's your biggest concern for 2024? We've got a long year ahead of us. There's obviously going to be some challenges along the way. What do you think, or whether it's personal or market-wise, what's the biggest challenge for 2024?
Well, I mean, I think ultimately going into this year being an election year, and correct me if I'm wrong here, but I think a lot of times the market itself is generally fairly bullish or tries to be pretty bullish at these periods of time. So, if I'm looking at the charts alone and the charts are still speaking to me very, bullish at this point, and then you tack on top of that an election year, I don't think from a bullish bearish standpoint, I don't have an outlook that things are going to be really bad right away. I think the biggest challenge in trading or investing in general, it has nothing to do with the actual market or the economy. I think it has to do with our own personal issues. And I think the biggest thing to watch out for is not getting in your own way as an individual trader or investor. I think that's going to be the challenge always, because, as any of you guys listening right now, and you certainly know, Merlin, it doesn't really matter what direction the market is going. You can generate revenue in any market environment. So I don't really see challenges going forward unless you've got personal challenges like discipline issues, trade plan issues. Lack of capital is an issue. That can be a challenge, right? But yeah, that's kind of how I look at every year going forward is, and we were talking before the show even started, being a swing trader, generally speaking, and also at the hedge fund, we are in positions for, 4 to 6 weeks tops, generally speaking. We don't really have a longer term outlook, way to the end of 2024 or beyond, because we're not planning on holding positions for that long. And so, again, challenges are all internal, I think. I don't think they're external challenges at all.
Yeah, I agree. It's funny, as you were talking about that, you mentioned it is what it is. And I think that's kind of the the safest approach towards the market is kind of go, hey, whatever comes out comes my way, comes my way. It's funny, as you mentioned that, I was actually thinking, I wonder if anybody has bought the domain name. It is what it is. Like, that would be a great website. Unfortunately, guys, it's for sale right now for £7,000 apparently from somebody. You could probably get it for £5,000. But anyway, we thought we could get you a new side channel there of Trader's Army. You could have It Is What It Is channel, where it just doesn't matter what happens.
Is what it is. Yeah,
I like it. That's a good one.
It's kind of like the Family Guy episode of "This Is What Grinds My Gears." If you remember that one,
I don't. I watched a couple episodes of Family Guy, but never got really into it.
Oh yeah,
good stuff.
It is what it is. That would be a good one to have.
I would. You mentioned right at the beginning, you said, well, I haven't thought anything bad about the markets. Well, that means you really haven't thought anything good about the markets, right? You don't go into it saying, hey, I feel bullish, although you did say that there is a bias, and there actually is. If it's both presidents candidates are new, then it's a 7% market gain for the year. If it's a seated president running for re-election, I think it was 12.8 was the numbers according to Stock Traders Almanac, and that goes back to the 1950s. So you're looking at 7 to 13% gains for the year, potentially based off historical statistics. So if you are armed with those, you are managing a big portfolio now. It's not just your capital, which you're doing, intraday and swing tradings and maybe a couple positions. Does that weigh into it when you're positioning this hedge fund where you say, you know what, I'm pretty sure statistically we have historically positive returns. Let's build up a bullish bias here. Or is it still just, I have to ignore that stuff?
So, I mean, I don't ignore what's going on economically or politically. I don't ignore it necessarily because I don't want to be ignorant to what's going on, but I don't look at that and say, here's how we're going to build positions based upon what news is talking about or what that economic landscape looks like. Largely because I've seen too many episodes of misinformation out there regarding news and economic outlooks, and I don't know, man. I've had so many experiences where I've seen people driven by news events and political events and economic events and be on the wrong side of positions more often than not. So I tend to pay attention, but ignore every word of it when it comes to building positions. Now, at the hedge fund, our core position model is positive delta, right? We're selling options that carry positive deltas. And so we're always going to have a positive delta slant in the portfolio. However, we're also always carrying a position hedge, I'm sorry, a portfolio hedge. That means if something catastrophic does occur in the market, we have a position hedge on the entire on the S&P index that if things fall apart, our position hedge makes a whole bunch of revenue, and it gives us time. Most importantly, it gives us time to manage those short-term positive delta positions. Not to mention that the options that we are selling are generally 15 to 20% below current price when we enter the position anyway.
Right.
So even if the market were to decline 8%, 10%, 15%, 20%, on average, our positions are still going to be fairly safe, except for maybe some higher beta positions that maybe move a little bit more aggressively when the market moves. And that's what those hedges are for. Mm-hmm. So, I mean, even if I were expecting a down market, I would still look at positive delta positions at key levels, expecting at least short-term bounces off of those levels, because we're swing traders looking at being in positions, like I said, for, just a few weeks, maybe 6 tops.
Yeah.
So
has your perspective changed a little bit since you're doing the hedge fund of, I know every now and again you'd find yourself in a pretty risky, extremely high volatility position like a GameStop or an AMC or a First Republic, which I got caught on as, those types of things. Are you doing that in the hedge fund, or is it kind of saying, let's just play it a little bit safer and go for that consistency? Because I know as individual traders, we kind of swing for the fences sometimes.
Yeah, I mean, I'm still doing some of those. I haven't traded any of those names that you said recently, but there are still some names out there that we look for that have higher implied volatility, which we know is going to carry a little bit of extra risk because of the implied volatility inflation. But when we look at things like the premium that we're collecting relative to the strike price that we're selling, so we're looking at return on risk. we can see pretty high return on risk, which then takes into consideration, okay, well, what if the stock does actually go to that short strike and we need to manage the position or take assignment of the shares? What's the risk reward relationship for taking on this higher implied volatility position? And a lot of times, especially when you're looking at, larger premiums that are coming in, your risk on the downside is going to be less because the premiums coming in are much higher. And because implied volatility is high, that's how we're able to get, 15, 20, 30% out of the money on those options.
Yeah.
And so, there's probably going to be some positions like a GameStop or the First Republic that come back and, bite us. But our position sizing is really key too. So like when we position size, I'm sure we've all heard like, well, how big of a position should I take? And it's like, well, I'm a huge fan of the law of large number, like of a large number of average trades being on.
Right.
And so, when I first started trading, I was willing to risk up to 2% of my account value in a single trade. Well, at the fund, because we're looking for a large number of trades to spread that risk out over a large number of trades, our risk per trade is under a 0.5%. I mean, we're talking like 0.30% risk if the stock comes down to our short strike and we need to make any adjustments. And so I'm never going to really be in a position where the account gets, hurt in a big way because we're not position sizing in just a few positions. We're positioned like right now we're in 52 positions.
Nice.
Which, you spread that risk out over the course of 52 positions, and we're using some leverage, of course, but, I mean, right now, if I look at the whole portfolio, only 2 or 3 of them are at risk of being in the money by next Friday. And I'd say probably 25 of those trades are going to stay out of the money. If not all of them will stay out of the money by next Friday. So it hasn't been a huge concern because of the way that we position size. And I like those higher volatility stocks because they pay good premiums.
Right.
Think about something like Coca-Cola that doesn't pay a high premium. It's a fairly safe, low risk position to be in, but that's not going to get us the return that we need for the level of safety that we like in the fund.
Yeah. Interesting. Yeah, I've shifted. So I have 2 gamble accounts, and in those gamble accounts, I can go crazy out of the money stuff, and with the high flyers, like today, your marathons, your riots just got crushed today. Well, great day to be selling some puts potentially, but I can only do this in those 2 accounts. And I did some end of year statistics for my end of year show that in those gamble accounts, every now and again I'd hit a nice winning trade, but overall losing in those 2 accounts. And then the accounts I had that was the most consistent was basically I'm only allowed to trade ETFs and silver and gold, right? And that's pretty much it in those accounts.
Sure.
The consistency was so much higher, but I don't know if you saw the end of your show, the market moved 23.79% to the upside, and my overall rate of return was less than that. I was looking at 16%. I was like, I'm frustrated because I had essentially 7% of negative alpha, right? I didn't have alpha. I missed out by 7% from the market return, so why not just buy the market? So it's interesting. I feel safer. I have a higher win rate. My trades felt better, but just didn't beat that market this year. We'll see what happens, last year. We'll see what happens this year. I'm pretty sure I'll beat it this year.
Yeah. I mean, if it's your goal to beat the market every year, then that's frustrating.
That's it.
I think that for main stage, which is the fund, our goal isn't to beat the market every year. Our goal is to beat the market average over time. And so, when I was preparing for launching the hedge fund, I've been managing a private account for 2.5 years, and that account grew from 16 million to 23 million in just over 2 years. And one of the things that we're using the same strategy. It was just in a more private account. But if you look at the returns, we were pretty much on par with the market for the first year. But the second year we were trading that fund, the S&P was down 19%. Yep. Excuse me. And our fund was up 11%. So yes, we're targeting 18 to 24% on average year over year, delivered to the investor. But you're not going to hit that every year, especially if the S&P is down 20%. Right. But with a 30 delta, I mean, you got down 19 on the S&P, but up 11 on the, that's those are the years where I think the fund will really pay off, is when the market is flat to even down. That's where we're going to really elevate the investor's experience in the market more than probably most could experience.
Yeah, I concur with that one, and I feel the same way. I mean, I had a great 2022, exceeded that by a good margin, beat the market, and it was positive, which is great. My goal is just to not have losing years overall, which has been great, and beat the market. It's funny. Years ago, I put numbers on my like I want to get 30% this year or 40%, and I got frustrated if I didn't hit those numbers. And if you make 30% as your target, and that year the market's up 60%, well, you failed, really, because you made 30%, but the market was up 60. Well, you made half the rate of return on the market. Flip side of that, if you made 30% and the market was down 20, you're walking on water right there. I mean, incredible type of thing. So you're right, it is the long game, but I set it up for myself as I have this goal every year of just beating the market. Just beat the market would be my goal. I failed in 2023. Disappointed with myself.
It happens.
It does happen.
You should just quit, Merlin.
That's it. I'm done. I'm going to go become a stripper. I got that. I'm
Got the show down.
Let me go to my second one here. I know that this is probably not going to be that relevant from your perspective, but I've been asking it of everybody. What do you think would be the best performing market segments? Best and worst, right? Are there some things that you see as going, hey, we see a lot of opportunity here, maybe from the bullish perspective, and other things you look at and go, oh, I just think this thing's going to fall apart this year or look terrible going forward. You got any market segmentation like that?
I mean, I'm sure it's probably gonna change throughout the year.
Yeah.
I mean, I'm looking right now going forward to the year being a positive year, so I would naturally imagine that financials are going to do really well throughout the year. And of course, that's going to be somewhat dependent upon how the Fed handles interest rates. But I don't think we're in the market for any more rising of interest rates. So at least right now. So I think financials are going to be a good place to be. They certainly have been for the last, couple of months, and they look still very bullish right alongside the indexes. And if that's all true, and the market does play out very positive throughout the year, then that means probably things like in those safety sectors, those consumer staples and utilities will probably underperform. I mean, I'm sure they'll do fine, but I'm sure they're going to underperform. I don't really have an outlook on what's just going to fall apart, though.
Yeah.
Like, I'm sure what would fall apart in that environment. I mean, maybe there's something in the energy, sector. I know, like natural gas has had a really difficult time holding on to anything.
Anything, man, brutal.
Really anything. So, I mean, maybe something in the energy sector may not be super positive, but I'm not really sure what I would see as something, really bad going forward.
Okay. No answer necessarily needed. Just, sometimes, we come up with an idea or hypothesis about something and you go, I think this is going to do really well or really poorly. So, just was throwing it out there, see if there's anything that you were focusing on.
That's a great question. It's a great question.
Yeah, your answer is right, though. It's like, it's going to change over the course of the year. So overall, it's hard to say is something going to be bullish or bearish for the next year. Much easier to say is something going to be bullish or bearish for the next month or 2 months, right? That's
right.
That's hard enough to do. I put out there, just to show you where my mind was at. I think the consumer discretionary is going to take a big hit. You have the highest level of consumer credit we've ever seen. Debt is absolutely surging, and if that slows down at all, my feeling is that people are going to rein in their spending a little bit, and that'll impact consumer discretionary, which is one of the better performing sectors of 2023. So,
yeah.
But I could be totally wrong. If the Fed starts cutting rates aggressively, and all of a sudden money gets cheap, and people are like, oh, I can now borrow against my home and have more money now. Boom. Then all of a sudden I'm wrong, and if I'm wrong, I have to make sure I have my stop in place. That's all. Yeah,
it happens. But yeah, I could see that logic. I could see that logic playing out. For sure.
Yeah. The tough one, at least for those that follow how markets are constructed, you look at consumer discretionary. It's a very small part of the overall market impact. When you look at things like the S&P 500's balance, tech is such a huge component that it's really all about tech. And if tech keeps on moving up, then this whole thing's going to keep on moving to the upside, most likely. We looked at utilities, which is such a tiny little impact on the overall performance of the S&P, even though it was down 30% last year. Still didn't really have much of an impact on it. So,
yeah, one of the things I was actually, I don't know the answer to, but I was going to look at what are some of the consumer discretionary stocks, what stocks are in that sector. I mean, just looking at the sector, and some of them, I don't know, look a little less discretionary
Yeah,
anymore.
I noticed that
You
too.
know,
Yeah.
I don't know that Amazon is very discretionary. I don't know that, Starbucks is discretionary for a lot of people. I think
I think
that's almost
Starbucks is more discretionary than Amazon. I look at
it
Amazon
is.
as I buy everything on Amazon. I'm building a second studio over here because I got a project lined up. So I bought all these nice front end lights, back end lights, teleprompter, computer, laptop,
Oh,
all the cables, and that stuff was delivered in under 48 hours. I was like, come on, man! I didn't have to go to the store, so I do every piece of shopping through Amazon. However,
of course.
Starbucks. Tom, one of our regulars, is probably sitting there with his pinky out drinking his ice mocha frappuccino at Starbucks right now. And, to me, I'm not going to spend that kind of money to go have a cup of coffee. I don't really like coffee anyway. I'd rather make it at home with a Keurig, which is going to cost me what, $1 a cup versus $6. If I just
Yeah. I don't remember the last time I had Starbucks. Ask my kids, on the other hand, and I'm like, why are you spending so much money on Starbucks every month?
Yeah, track your expenses, buddy. You're spending 5 or 6 times as much as you need to. But that to me, that's discretion. And some people, let's face it, there's no argument here. Caffeine is addictive, and that's probably part of it. But I'm thinking high-end brands, your Coach bags, your Fendi, your Dolce & Gabbana, I think may start to take a little bit of a hit as people rein in spending and go, hey, do I need a $6,000 handbag, or can you go to Target and get one for $49? That type of
You
stuff.
ever really need a $6,000 handbag?
I don't. Yeah, Liz, she's right on. She says Tesla, number 2 on the XLY, is entirely discretionary unless you own one. That's definitely discretionary. I made the point that I want to see the numbers on it, but some of the Tesla models have now lost the rebate that the government was giving. They still have some models that get it, but some models don't get it anymore. And that's going to hurt, because one of the big reasons people are buying Teslas is, hey, I get a $7,500 rebate right off the top just for buying it. Great, I'm going to use that. So, yeah, I think Tesla will probably face a little bit of more challenge if we do go through slower times here going forward.
Sure, I can see that. But out of all the EV cars, they're probably the ones that'll suffer the least.
Yeah. Rivian, nice to see Rivian doing really good. Rivian, nice. Steve says Merlin can get by with cheap handbags. Oh boy, I identify as a male, Steve. I identify as a male. I don't need a handbag. I have a small, tiny little wallet.
Satchel.
It's a European man satchel. That's what it is.
Satchel.
Let's see. If we forecast the end of the year, and again, I know your answer is, I don't really care where the market goes by the end of the year. But if you had to, and hold your feet to the fire here, and say the SPX, right? We're doing a contest. I do it every year, and that contest is if whoever gets closest to the number wins 2 TraderMerlin shot glasses, which I know you just can't wait to get those shot glasses. I know. You've been bugging me for months now. Can I get those shot glasses? Hook me up with my shot glasses.
100%, yeah.
So the question is on the SPX. Where do you think it's going to end the year? You got any guesses on that one?
Oh. I mean, these are all purely guesses, right? I mean, that's all they are.
I like to say it's an educated guess, my friend. You have some experience, historical numbers, and maybe there's something there that you say, hey, I think this is where it's going to go.
I mean, would I be outrageous to think that the SPX has a chance of getting over 5,500 by the end of the year?
I will tell you right now, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. There's about 20 people that have over 5,500 as their target.
Yeah, I was originally going to say 6,000, but I was a little more conservative on the next move up, and I went to 5,500. But my first inkling was 6,000. I don't know if anybody's up that high, but I think that's not unrealistic. I mean, it's 26% away from current price. I don't think that's unrealistic given.
Let me see. So this would be based off of the close of December. That would be a 25.81% rate of return for the year.
Yeah.
I mean, look, it's not like it's unreasonable. It's not like, oh my, inconceivable. But it's lofty, It'd certainly be outside the historical norms. But there's a lot. If we get 6 rate cuts this year, then that could very easily happen. So
yeah, I'm going to say 6,000. I'm going to say we see S&P 6,000 sometime this year.
There it is. You guys can see it on the screen right now. Corey's in there at 6, which would be a gain of 25.8%. Let me sort this here real quick so you guys can see the whole list. There's quite a few people on it this year, which is good. I always like the more the merrier for me. We'll sort by
Hmm.
column
Oh,
there. There you
I
go.
don't see the list. I guess my YouTube is a little bit
There's a 30-second
little bit
delay.
delayed,
What's
right?
interesting is I have 68 people in this pool right now, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Only 11 people think that it's going to be down this year, which is interesting. I thought it might be more than that. Everybody else is definitely much higher than that, and your number right here, you are fourth from the top. The highest here,
Oh,
Daryl, I think, is being a little bit ambitious. Daryl says 83.95, and I'm like, I'd love to know, Daryl, how you got that number, because, man, that'd be awesome.
wow.
I tell you what, here, just do me a favor. If the markets get to 83.95 by the end of 2024, make sure that you cash out and go into something extremely safe in all of your 401k accounts and savings accounts. Make sure you do not hold after a 76% gain in the market. It's going to come back down for sure.
Goodness.
Oh, Scott M. Yeah,
Can you imagine?
Scott McCormick. Actually, Scott McCormick said unchanged. Jay Patel says Scott M. was around 6,300. He said 6,300 at some point. He said by the end of this year, though, unchanged. That was Scott's. He said unchanged.
Oh, he thinks back up and up and then back down.
Yeah, I mean, I think he's in line with what my expectations are, which is a lot of volatility, some big moves up, some big moves down, and ultimately is being kind of unchanged. I went with a little more conservative than you, Corey. I'm only at 7% gain for the year. So,
Got it. All right. Well, them shot glasses are going to be mine, buddy.
hey, I will hand deliver them filled.
Phil,
We
I love it.
we haven't hung out in quite some time. Hopefully we'll get a chance to catch up one of these days. What else is going on with you? I know you obviously the hedge fund is a very big deal. Anything noteworthy for 2024 market wise or trade wise you want to share with us?
I mean, Traders Army still chugging along, doing our thing there. We just are looking forward to continuing that this year. I mean, trading rooms seem to be going great. I see a lot of familiar names in here, so I mean, you can ask them, how things are going. But that's chugging along this year for like the main focus for the hedge fund is it's a raising capital kind of year. We're past the first 2 months. First 2 months had great returns. And so we're just looking towards raising capital, and we have a minimum, or I mean a minimum and a maximum we're shooting for. So that's going to be big this year. Personally, looking at releasing some new music this year. Released some new music last year, so toward the end of 2023. So I've got a lot of just personal and professional stuff that we're looking forward to this year, which is great.
Can we expect you playing at Stagecoach or Coachella or something this year? When's the band getting back together and going on tour?
Well, I don't know about that.
I'm just saying.
I don't know about that. But it's too easy to record music and mix and write and record music with people around the country. And so, it's a lot of bands that I used to play in from, back when I was touring and signed to record deals and all that kind of stuff. So we're just releasing new music, dripping singles out. And so looking forward to that this year. Finally, we got a couple songs. There was a band that I played with years ago. It was a Christian rock band called Big Dismal. We have 2 songs out in the last quarter of 2023 that are doing really well, which is great. And I say doing really well, but it's all like Christian rock radio, that kind of stuff.
Mm-hmm.
And maybe a couple of solo performances if management can get us on a couple of festivals, but not touring. No, thanks.
Done with that.
No,
there you go.
thanks.
There's the album from Big Dismal. It's called Fly Again. You can stream that one now. I've got it on here at bigdismalofficial.com. Is that the one band? I thought you had others.
The other band is called Mercy Drive, and that band is also going to be releasing music this year. That is just straightforward rock and roll, man. That's going to be fun.
The best way to go.
Yeah. So we'll be releasing new music this year as well. So yeah, at least 2 bands will be releasing new music.
Oh, I'm trying to find it on here. It's funny. I typed in Mercy Drive. It's like it's a nonprofit human service agency. I'm like, well, I'm pretty sure that's not the band.
That's not the one.
That's not it.
I mean, yeah. So if you go to any streaming music service, you can find both those bands, Big Dismal and Mercy Drive.
There you go. 2004.
Mercy Drive stuff is old. So yeah, we're talking about a 20-year anniversary here coming up. 20-year gap between releasing music.
Wow.
For Mercy Drive. Almost the same for Big Dismal, actually.
Wow.
Okay.
You were so young back then. Just a wee little. It's like you're kids. You know, we were that about that old when we were playing.
Yeah, yeah. They started way younger than I started, like playing like shows and professionally and actually doing it for real. So, but they had more guidance than I had when I was younger.
You know, for those that don't know, Corey's kids both are in a band and they rock. I've
Yep.
seen them a couple times. Pretty damn good for youngsters.
They do all right. Thank you,
Um,
though. Appreciate that.
yeah. You know, it's funny watching you out there hustling, doing the soundboards and mic checks and everything. I'm like, oh, daddy's the roadie now.
Yeah, well, I mean, things that I didn't have when I was younger. I didn't have a PA system. Now I have a PA system. So now I can make them sound really great, and we can as long as they play great, I can make them sound great. And so, myself and one of the other dads who's a professional touring musician, we work hard with those kids, and they work hard to make sure they sound good. So yeah, they're I'm super proud of them. So they'll be doing more stuff this year too.
Good. Good, good. Well, I'm looking forward to the announcements. I will catch up with you at one of those events, I'm sure. Let's see. What's Corey's take on fish? No, Corey is not a fish fan.
I can't really say I've ever really been a big fish
Yeah, he's a
fan.
rocker, not a jam band guy.
But there's certain things that yeah, it's a good jam band. Never, and I listen to some, but it's not one that's on constant rotation.
They give me a hard time because I'm an addict. I'm one of the groupies, and I was trying to get tickets. The Fish is going to play at the Sphere in Vegas.
Are they really?
Yeah, and so the 4-day pass went on sale. There's $750 for a 4-day pass, which is cheap actually. And
Not bad at all.
now they're going. I was first in line. The second that button lit up, I hit that button. I should have been first. I was 30-something thousandth in line. Got no tickets. They've all been scalped, and now they're going for $4,000. I think they might have dropped into the mid $3,000 for. I'm like, come on, it's ridiculous.
Yeah,
I hope you get to that level because I'm just going to say, hey, give me tickets, dude. Give me
tickets.
Hook me up with some tickets.
You might have to push a couple road cases around, but you'll get tickets.
Liz says, actually, Corey is secretly trading iron condors while he pretends to operate soundboards.
Yes, Liz, that's exactly what I'm doing.
You should name your kids band that. Like, yeah, you guys can be the iron condors. The butterflies is a little too.
To what? Merlin?
Nope, not saying. We live in California. It's okay.
That's right.
Yep. All right. Corey, I think I was going to wrap up. I was going to say I had any other questions for you, but that was it. Where are the market's going, what are the biggest challenges, what's your forecast on it? If you guys know, Traders Army is where you can find out more information. Do you have information on the hedge fund? Are you allowed to do that?
I mean, I guess technically we're allowed because we kind of have a relationship on the show, right? And you have a relationship with your fans, and I have a relationship with you. The thing about marketing a hedge fund is you can't really do that directly. You have to have it's very relationship based. So we do have a website that has minimal information on it, as far as where you can find out more information. If the thing about our hedge fund is that if you're an accredited investor and a qualified client, and on our website it describes, if you go to register at mainstagecap.com. So I'll put it in the chat box here, mainstagecap.com.
I don't think you can, but I will.
I can't.
I
put it in the YouTube chat box.
Yeah, it doesn't go. I don't think you guys can put in links, but I'll do it.
Well,
there you go.
I just spelled it out. Yeah. So there it is. Perfect. So yeah, so that's the website. If you register for the website, you're going to be asked a question, which is, are you accredited? Are you qualified? And you have to answer those questions appropriately before the button to register will appear.
Oh.
If you don't answer those questions appropriately, the button won't appear and you're say ineligible to register. And that's just an SEC, thing that we have to go through to just, make sure that the right people are seeing the details. But if you are, and you get past that and you register all of our investor documents and subscription documents and all the pitch decks and tear sheets that that your heart would desire to see how the fund's performance is expected, and strategy, philosophy, all that kind of stuff is listed there. But most importantly, if you want to have a conversation about it, just reach out to me directly. You can send me an email. Can I put an email address in the chat box, or do you have to do that?
You can't, but watch this. Just go ahead and tell me what it is, and I'll put it underneath your name on the screen.
All right, Corey, Corey.Lane, Corey.Lane at mainstagecap.com.
There you go. So you guys all have his email on the screen. Yep. Boom.
And that'll come directly to me, and then we can have a conversation. We can talk about it.
All right, sounds good to me.
You want to know more? Yeah,
I'm excited for you, man. I know it's just an incredible task. I mean, it's such a huge undertaking that most wouldn't even conceive of trying to do. So happy for you, man.
Yeah. Thank you. Yeah, I was shocked at the year-long process just to get everything registered, and it literally took 1 year from the date that we started working with our lawyers to launching November 2023. So, wow. But we're here and we're not going anywhere, and it's exciting.
Rock on.
Things are looking good. So I appreciate you, man.
May it be a very prosperous 2024 for you.
For all of us.
For all of us. For everybody. No, there's some people I hope lose money, but that's besides the point. All right, well, Corey,
or at least they underperform the
There you go. They underperform the
You're there outperforming the
There you go. That's the goal. Of course, of course, those people will never show you true statements and never give you actual real numbers. But hey, whatever, it's fine. That's on them.
Yeah. Hey, with a hedge fund, you can't not show true statements.
Right.
The auditors won't let you do that. So.
Yeah, you get into federal trouble with that, I believe.
And you would, and I do not look good in orange.
Yeah, neither would I. I'm doing good in my whatever color I want to wear. My choice.
Exactly.
All right, Corey. Well, thank you very much. I appreciate it. Say hi to Chuck and the family over there. Hope all is going well. And we'll get Chuck on here in the next couple months when he's free, and hopefully we'll get you guys back on here soon.
Yeah, love it. He said he's sorry he couldn't make it, but to tell you so hello.
Sounds good. All right, buddy. Take care. I'll see you soon.
Appreciate y'all. We'll talk to y'all soon.
All right, take care.
Thanks, man.
That was Corey Lane of Traders Army. You can find out more information going to tradersarmy.com. Pretty nice. He's got a bunch of different information there. I know he got a bunch of students in here of Traders Army as well, so you guys feel free to talk amongst yourself with that and how Traders Army is. We talked about main stage and his outlooks for the year. So let me go into Oscar's question here. It says, Merlin, please comment on the 11 ETF Bitcoin movements today and your future expectations, please. Any favorites? I have not dove into it. I watched the price action, but really, it all is going to look like this. You got, this is the Bitwise, Fidelity Bitwise one today. Here's HOLD. Nope, this is not the one. ARKB. All right, so they all just have one candle worth of data. So it's not really that important to me that they were listed. What I want to do is I want to find out the calculation. Like, what percentage of a Bitcoin is this, right? How much does it actually represent? In this case, I believe ARK is 1/1000th of a Bitcoin, but I'm not exactly sure because right now Bitcoin is trading at, let's go Bitcoin futures, trading at 46,350, and this is trading at $46.76. So my assumption, and we know what assumption does, is that the ARK one is 1/1000th of a Bitcoin. So I don't know. I need to check all that out. There's just so many new ones. I mentioned on yesterday's show that my belief is that out of those 11, you're probably going to have 3 that make it, and maybe 4. But right now, the swimming pool just opened. If we look at all of them, and it's like one gigantic swimming pool of liquidity, meaning everybody's now allowed to jump into this pool with an ETF. What you'll get is some will become very popular. It's like the cool kids in high school, right? They were the cool kids because people thought they were cool, and then more people joined up with their clique, and they were the cool kids of the big posse. I look at this one as over time you're going to see people gravitate towards the more liquid ones. And while GBTC says, Coach says GBTC was best one of them today. Well, GBTC, had a long way to go to close that gap. Remember, this was significantly underperforming, and now we'll see how this ultimately does it get back to parity. Let me see here real quick. It's still undervalued technically. You can see here it's trading at $40.69. This is supposed to be 1/1000th of a Bitcoin. So if I go here to, let me sort this and get you guys the chart of it. This is how much at a discount. Oh, I guess I don't have it on here anymore. All right, what did we, I forgot the formula. I'll have to put that one back on here. I'm not sure why it's no longer listed on my my table here. That's kind of strange. Oh, there, GBTC times 1,000. Huh, all right, I'm not sure why that's not working. Anyway, I will bring that back up for a different time, but I just don't know which one's going to make it. I do think that BlackRock will most likely be the one that survives, or at least one of the big ones, and I think ARK will do pretty good as well. Now that said, let me run in through our top 8 markets here today, things are changing in the after-hour session. I had this sorted earlier, and now all of a sudden it's switching around yet again. So let me just sort it by where we are right now. Selling off a little bit. Yeah, the Russell 2000 was down 0.75%. You know, I felt we were going to come back down towards that 1900 mark. Actually get lower than that to 1886, which is right in here. But that rally we saw back on Monday, you know, it kind of made you go, oh, wait, are we just small pullback and then rally out of here? I can't find the ETF ticker symbols. Well, lo and behold, it should be. 1 second. I thought I had them all here. Dab nabbit. Let me bring that up for you. I had all of them on yesterday's show, so I just have to bring up this slide deck for yesterday, and then I'll bring those up for you. But as I do that and multitask at the same time, let's start things at the bottom here. I got that Russell 2000 as we mentioned. Let's go up to gold, which is down 0.42%. I mean, look, the picture tells you it's just going to be drifting lower. Again, I've got that yellow box I mentioned at 1987, which would be a buy point for me. There's actually one a little bit before that, which gets to right around, call it 2000. But it just feels like it's going to keep drifting lower and test those lower lows. So let me get the slides up here for you. I know you wanted to see those tickers. I'm pretty sure it was on yesterday when I did them. Huh. Oh, you know where I did it? I did this in my crypto program. I did... let me bring this up for you here. I know I have it somewhere, folks. I will have it here for you shortly. And, yeah, here we go. So this is from that page there, copy, and I'll post this into your slide deck. Hallelujah. Sorry, doing these live takes me a little bit more time than normal, so let me get that in there. And here you go. So these are the 11 slides for y'all. There you go. Sorry it took me so long, but there's your 11 and the ticker symbols associated with those. You should have all those right now. Done. I'll even modify this as we go. These are the Bitcoin ETF. Boom. Ba-ba-bum. All right, I'll leave that there so you guys can take a screenshot or scroll through them or whatever you want to do. Getting pretty good. It's jockeying with all this stuff, Patrick. That's the challenge. I just got so much, you know, trying to do mission control with all the broadcasting of a live stream with the channel and switching all that stuff. Yeah. Chad says GBTC, I think we'll get back to parity and we'll be dominant as they had a market share before, and now without the $6.95 fee, I think that they have infrastructure to lead. I agree. I don't know if they're going to lead it. I know that, you know, the thing that separates them apart, and I'll leave this on the screen here for a while so you guys can write it all down. The thing that sets Grayscale apart is they already have the Bitcoin, right? They don't need to go out and acquire anything new, so they're already kind of set. They have it. They've got it everything in place. They've been doing it for a while, so I agree with you, Chad. That gives them a competitive advantage. However, BlackRock is the big one. You know, BlackRock is the juggernaut that's going to come in there and dominate and push. And, you know, I personally think that there is going to be influence on the part of BlackRock. They're going to go to different investment firms and say, hey, you know, don't offer this one to your customers. Don't offer that one. You guys may have heard Vanguard today saying they're not going to offer any of these Bitcoin ETFs to their customers, which was a dumb move because what's happened, you look on social media, look on Twitter, a lot of people who had Vanguard accounts, they're posting the graphics that they're saying, I'm transferring my account out of Vanguard immediately because of this. Vanguard could take a big hit here. We'll see what the actual fallout from it is, but Vanguard saying they will not offer the spot Bitcoin ETFs to any of their customers, and all of a sudden Vanguard is seeing an exodus of some customers. Now, who knows if those are big customers or just small fish, but either way, it's an interesting sign of the times. Oh, you're not going to allow me to buy this on my Vanguard account? Screw you, I'm leaving. Pretty funny. All right, let me go back. I think that's enough time for the Bitcoin ETFs there. I will scroll up our list here just a little bit, getting to the S&P 500, which stalled out right at that red line today. The red line is at 4,841.5. Today we hit 48.38. So very close, just 3 points away from that level before selling off. You know, even with that inflationary data, if you saw the inflation data today, let me bring that one up for you. Here is your inflation data today. CPI ticked up higher than expected, right? So this kind of supports my theory that prices are still going to go back up. And energy, I think, has been a big factor in this one because it has moved up a little bit. So if we, again, see inflation, CPI numbers start to tick up and continue that over the next few months, the discussion of rate cuts might move off the table and potentially become rate hikes again. Now, I don't think that's going to happen, but I don't think the cuts are going to come as furious as the market is expecting. If we look at, that's the year-over-year growth of inflation is right around 3.4% according to CPI. If I go here to the month-over-month, it still doesn't look bad. 0.3% is not that big of a deal. It certainly has risen significantly from November, but unless we get above 0.05, I don't think there's anything really to worry about here with the with CPI numbers. So that was the big news that came out today, and I think has some people questioning the markets and inflation, but the market didn't react too badly. Slightly down for the S&P. Dollar index was pretty much unchanged on the day, gapped down and just kind of hovered there at 102.31. Bitcoin. Lots of volatility. Man, Bitcoin futures today hit an intraday high of 49,435. I was loving it at that point. I was like, are we going to break 50,000 today? No, we didn't. Right now, we are closed at we're at 46,350. That's just barely unchanged on the day, even after that giant move to the upside. From where we closed yesterday to the peak, it was 6.53% gain at one point today, finishing unchanged. NASDAQ 100 takes your bronze medal, your bronze medal, third place, slightly up, but nothing really noteworthy here. Again, those highs you see on those NASDAQ futures, NASDAQ 100 futures, will be the next big stopping point, and that is right at 17,165. All right, top two. 10-year bond. 10-year, it shows actually up 0.18% right now, but it wasn't. It's Thursday. It's already on Fridays. That's for Friday. If you look at what happened today for the 10-year, we had a slide of 1.54% on the yield. So down day today, the new session just started and is up 0.18%, but the trend still looks rather strong to the downside. And finally, crude oil. You look at this chart. What we have going on right now is consolidation. You can see it right here. You got these peaks. If I connect those peaks like this, it looks like a downtrend line. I can go across the bottoms here, and I have what looks like a uptrend line, which is compression. And during a downtrend, as we've seen since October, late September of 2023, when you have a downtrend like this and then all of a sudden kind of a pennant formation, it typically will continue in the direction of the previous trend, which would be down. So we'll see if that happens. That certainly would be good for the markets as crude oil drops, energy drops. That means inflation would get even better. As you guys know, I have this as my big wild card for the year. I think this is the biggest challenge facing the market is what happens with energy, but we'll have to wait and see there. What do we got? I see Merlin, what information, if any, would you take away from these ETF charts for your trading and outlook on firms' markets? When I look at those charts of the ETFs, I take away nothing from them at all. One candle, I can't make a trade off one candle. Do I go back here and look at ARC? Here's ARC B. Do I look at this and say, oh, let me break this on a 5-minute chart and make trades off that? I wouldn't. I mean, you had huge excitement early this morning on ARC B. It was actually, if this is 1/1000th of a Bitcoin, it was pricing Bitcoin at close to $54,000 at one point today. Then just gave it all back and now is flat. So I don't. Zero emphasis on this one, honestly. I have zero interest at all in these ETFs right now. I mentioned that on the program the other day. It's really a question of, wait a little bit. If you find a level of demand that's on Bitcoin, an area where you feel like, hey, this is a spot I want to buy it, then you could potentially jump into some of those spot Bitcoin ETFs. But give it a week or at least a couple of weeks to look at the volume, and you'll see the volume start to build on different ones. And I'll do a comparison maybe in a week or so, and we can reevaluate these 11 spot Bitcoin ETFs and say which one would be the best one to go with at this moment in time. TD Ameritrade, only tickers I've found today. Yeah, so not all of them are listed yet. I was looking for the BlackRock one. I couldn't find that one either. Oh, all 11 are trading, Chad? I did not see all of them on Ameritrade. Of course, I didn't look today. I was looking last night to see if they had listed some, because Fidelity had already listed, and E-Trade had already listed some of them, but I don't know about all 11. I'll do that research for next week. As you guys, I mentioned earlier in the week, I'm not going to do a show tomorrow. I'm going to a giant presentation in Riverside tomorrow, and my presence was requested, so I will be at that one tomorrow. So no Friday show for you guys. This is actually it. I should have had a glass of whiskey here today, but I'm busy setting up another studio over here, so it's a little, probably whiskey's not the best choice for me for today. But my accounts haven't transferred yet. Okay, cool. As far as tomorrow goes, let's look at that economic calendar, because that really is, there's two things here that are really big news. And this is, I will say, big news. Number one is this one right here, which is going to be Friday. You can see for the U.S. markets, let me zoom in. U.S. markets, we have PPI numbers coming out. And of course, you had CPI tick up both on the monthly and the yearly. Let's see if the PPI numbers tick up tomorrow morning and paint a clearer picture of potentially rising inflation numbers. Well, that's weird. Potentially rising inflation numbers for the United States. Now, from there, the real fireworks start. In my opinion, this is going to be the most volatile day of the week because of what you're going to see with earnings. Now, give me a second here to bring up my earnings calendar. Oh, Thomasina, that's all right. I'll be around next week. Let's go to the earnings calendar, click on this Friday session, and here is what happens tomorrow. Bank of America, JP Morgan, Citigroup, Wells Fargo, BlackRock, Bank of New York Mellon, HDFC Bank Limited. I mean, you have some big, heavy-hitting banks tomorrow. Market cap of over $1 trillion worth of banking institution filing their earnings numbers tomorrow. We'll see how that goes. Right now, I'm not going to go to the expectations at this point. I don't know whether those are, it looks like they're expecting declines for most of them from an earnings perspective. On the non-banking companies, you have United Health Group and Delta Airlines reporting tomorrow. So it will be a very, very busy day for the equity markets tomorrow. And that should happen, or most of it's happening right before the market opens. So it should create a lot of volatility. Will there be a show on Monday? Yes, Les, I'll be back. I'm just going out there for the day and then back, and then I have a huge project on my plate to produce a lot of videos, and I know that there's a request for me to stop doing this show, to which I denied. So just so you know, I'm not going to do it. I will continue to do these shows, but tomorrow I will be gone. I'm gone. I get to be a spectator tomorrow, which will be fun. All right, guys, that's going to do it for me. Hope you enjoyed the show with Corey Lane. I got no show tomorrow, as I just mentioned. I'll be back on Monday. I hope you guys have a fantastic weekend. I wish I was doing a show with you because, man, these financials are going to be definitely stuff to talk about tomorrow. Are they closed Monday? I don't believe so. I don't believe they are. They might, but I don't think so. I didn't think that they were, but I will check here. Just simply go to the New York Stock Exchange trading hour calendar, and oh yeah, Washington's birthday. Monday, January 15th, Martin Luther King Day. That's Washington's birthday. Martin Luther King Day, yeah. I don't know why I forgot that one was there. Yeah, they will be closed by MLK. Well, that changes everything, folks. If there's no market open, I probably won't do a show. Just because I like having markets open, otherwise it's just kind of rehashing. Well, you just saved it, Les. You just created a 4-day weekend for me from Trader show. Thanks, Les. I was planning on doing a show. I forgot that it was actually closed on Monday. For some reason, I thought in my mind I was thinking it was February, but yeah, markets closed on Monday, so I will do a show on Tuesday. We could all meet for a virtual drink. Well, maybe we could do that. I don't know. I hadn't really thought about it. Yeah, Pepe. Everybody can boo less. How about you on Monday? What do you mean? Thanks, Les. You asked me about SoFi. Oh, how about Zoom? You'd have to all email me, and then I'd send out a link, I think, to do that. Maybe we could do that. No, you know what? At this point, it's just too much to do right now. I'll take Monday off. I know. Sorry. It'd be good for me to catch up on some of the other projects I got, so I can get ahead on some of those ones. So, I'll be back on Tuesday. Sorry. For those that are going to be trading the crypto markets, happy trading on Monday. Happy Martin Luther King Day. It's actually one day where I go back and I play two speeches by Martin Luther King every Martin Luther King Day. Number one is the highest mountain speech, or the mountaintop speech, and then the other one is obviously the I Have a Dream speech, which I like them both, but they're just kind of moving, and I think it's something we should listen to every year to remind us of what's important. But anyway, thank you guys so much. You need to add our emails. I know I should create an email database. I don't have an email database, unfortunately. Do I like SoFi? I'll look at SoFi real quick because I have no problem with SoFi. But let's go SOFI, and then I'm going to wrap this one up. SoFi Technologies. I like the company, but if you look at the chart doesn't really say much, right? Yes, it's been drifting up. It's making higher highs, higher lows. So I like the fact that it's in an uptrend right now. But it's not like a real strong uptrend. So I would actually, at this point, I would be bullish on SoFi. I do think that the trend has turned the corner back in late 2022. We've been making higher highs and higher lows ever since then. So all in all, I would say I am bullish on SoFi, but it's not like I'm excitedly bullish. It just looks like the trend has changed and there might be some upside move to the upside. I don't know there was a Charles Schwab Bitcoin, but Bing found it, and STCE might be a combination of some. I'll have to check that one out because Schwab didn't actually file for a spot Bitcoin ETF. They weren't one of the people that were applicants, so that's strange. We'll see. Right now, you're going to have a lot more companies are going to create their own, which will be interesting. When you have like a Fidelity, Charles Schwab, E-Trade, Ameritrade, they may all start filing their own. Of course, Ameritrade is Charles Schwab, but that's what will probably happen with a lot of these firms. All right, that's going to do it for me, everybody. We're going to cut it short from a 1-hour show. Thank you so much. I will see you all on Tuesday. Have a fantastic weekend. Hope you do something fun. And if you have any emails, questions, comments, email me at TraderMerlin@gmail.com. What I should do is I should create a database of email addresses so when I do decide to do a live Zoom show, which I need to get the logistics down, we can all have a happy hour one day on that channel. So anyway, have a fantastic weekend, everybody. I will see you all on Tuesday. Take care.